data out today. We've got manufacturing, which is quite important for the South African economy. It is expected to come out at 6.1% from 3.2% in December. Is this what you're looking at as well?
I'm looking for something which is a little bit softer, but still in excess of 5%. Although you've got to remember, we are now comparing the data to year-ago levels, which was the depth of the recession, among the worst performance we had seen in a long time. So intrinsically, in absolute terms, manufacturing is not high. It's certainly well below what the levels we had reached at the peak in 2008, but it's recovering.
We see PMI as well reached a level of 60.4%, above that key 50 mark. Can these levels be sustained?
Well, in the short term, yes, probably, but I think part of this swing in manufacturing after a big contraction last year, the nice rebound we're seeing now, is in part linked to the inventory cycle. Destocking led to a big drop in manufacturing a year ago. The end of destocking and a bit of restocking is now raising it. At the end of the day, in order to maintain a fairly strong pace of manufacturing growth, you need final demand, especially final domestic demand. There's still a question mark on that one.
And if we look at the rand, it's reached a level of about 7.35 to the dollar. There's a lot of debate surrounding the fact that of its strength. What effect is it going to have on manufacturers going forward? Could we see double-digit growth coming out of the manufacturing sector if we carry on seeing such a strong rand?
I think it's going to be difficult. If you look at the performance of manufacturing over the past 10 years, even during the good years, never really reached double-digit growth. Occasionally 5-6%. Most of the time we were within that level. And you could see at the export level, the manufacturing export level, South Africa tended to lose market share globally. And if you look at the real effective exchange rate of the rand, it is now a bit stronger actually than where it was on average in the past 10 years. So unless we have managed in the meantime to improve competitiveness on other fronts, which is very uncertain, we are likely to again be disappointed by our manufacturing performance, by our export performance, because the rand is just a bit too strong.
All right, and we have interest rates due to be decided next week. A rather positive outcome on the manufacturing, let's say 6.1%. Could we see a last cut, or will the SARB decide, no, we're not cutting anymore?
There is still a chance of a last cut, although I wouldn't make it the most likely scenario. My feeling is that the probability of such a move is no bigger than 25, maximum 30%. The reason why we could still see a cut is because inflation has shown some kind of moderation, in particular at underlying levels in recent months. But obviously, the stronger the data are and the more they point to an economic upswing, the less compelling it becomes for the Reserve Bank to cut, because it tends to suggest that what's been done last year is working in turning the economy around, and there's no real reason to take a risk with an additional cut.
Other data out today is the mining sector, mining production. What are your expectations on that front?
Well, that's a much more volatile piece of data from one month to the next. And you've seen a bit of recovery as well, but less pronounced than manufacturing. I think we see a decent figure in the current month. But there again, you know, we have done reasonably well in terms of the value of mining exports in the last 5-7 years. But in terms of the volumes, if you exclude the price effect, South Africa has struggled, and the mining sector also is performing within its potential.
And if we look at the 25% increase in electricity prices by Eskom, the SARB has factored it into the inflation outlook. What has that done to your inflation outlook going forward?
Well, if anything, I've lowered it a little bit, because I had worked on an assumption that NERSA was going to give Eskom a bit more than 25%, more around 30-32%. So it's marginally lowered my inflation outlook. I still expect we are within the target for most of this year until perhaps the middle of next year. Then there is a risk we go back above target, but that is largely because I expect that at some point the rand weakens, and the big risk to inflation in South Africa at present is not really from the domestic economy, it's more from the external side.